Howdy, Team 42. It's your skipper here, Darius Dell, to present another episode of our Pro to Pro Live. I'm joined with my friend Andrew Fischer, founder and CEO of QuaIL Technologies. How you doing today, Andrew?
I'm doing well. Can't complain. Yourself?
I'm wonderful, man. Thanks for coming on the program. So, audience, friends, Team 42, we like to bring guests on this program that do one of two things. One, they either make us smarter or they make us wealthier. I brought Andrew here specifically to help us do both, and I do believe that he'll be able to accomplish that. So you're definitely going to stick around because this is he's one of the most exciting people that I currently interact with right now. He's at the cutting edge of developing AI solutions for investors in the financial services space with a really impressive background. So I think you're all going to definitely learn and appreciate what Andrew has to say about AI and specifically AI as it relates to investing. So Andrew, you're a friend of mine here in full disclosure, despite being a Harvard football player. you but I wore my Yale tie if you can't see for banter today.
Oh, I love it.
We got a big game coming up in a couple of weeks. But all pleasantries aside, you have a really impressive background in terms of how you got to become the CEO of QuaIL Technologies. Can you embellish that a little bit for the audience?
Definitely. So first, thank you so much for having me on. I have seen all, if not nearly all, of the episodes that you've filmed, and so incredibly privileged and honored to be here today. In terms of background, I started my career on Wall Street. I was at Bank of America, building AI and ML enabled technologies for a couple different teams within the firm. Everything from signaling to recommendation systems to overall portfolio construction. And then moved over to BlackRock to essentially do the same thing for their systematic active equity team. And it's a relatively small team. We manage a little over $250 billion, where I would say 85 to 90% of the investment decisions were driven by AI. And so it was obviously years ahead of the AI wave as of late, and a very unique understanding and perspective that I was privileged enough to witness in terms of the impact that AI can have on investment outcomes. And one of the bigger projects that I'd worked on at my time, or during my time there, was a model development around predicting the probability of a Russia-Ukraine escalation. And we'd finished that about a month and a half before the full-blown invasion, and had the opportunity to divest out of some of those risky assets, and ultimately resulted in saving our clients billions of dollars in averted losses. And so, again, a very unique understanding and concrete example of the impact that AI can have to investment outcomes and business outcomes generally.
Yeah, I love it, man. Absolutely. So, talk to me about the AI opportunity set as you see currently, and then we'll talk a little bit about what you guys are doing to meet those challenges at QuaIL Technologies.
Definitely. So I think there's an incredible amount of opportunities in terms of how AI can be applied, is being applied, and ultimately will be applied to financial services and specifically investments and management. And I think to take a step back in terms of QuaIL Technologies. So I left BlackRock in August of 22 to start QuaIL Technologies. And essentially what we do is we work with financial advisors, wealth managers, and financial service professionals generally to help them overcome the frustrations of dealing with legacy systems and siloed databases so that they can ultimately accelerate workflows, elevate productivity, and at the end of the day, deliver better outcomes for their clients. And how we do that, and this informs sort of the discussion moving forward, is by working with business professionals like yourself, the true domain experts, to empower you with the resources to centralize, enrich, and transform your data and other assets that are critical to your business, your operations, your system, and your process, so that you can leverage them in AI systems downstream. Ultimately, for business processes, whether that is report generation, market research, client stakeholder communication, real-time insights, and then all the way through to agentic systems that I'm sure we'll dig into at some point later in the conversation. But that sort of gives an overview of all of the different areas that we are exploring and working with individuals like yourself to ultimately realize better investment outcomes, better client outcomes, and do all of these things that really empowers the individual, the business professional, the domain expert, to leverage this incredible technology.
I love that. Yeah, appreciate that, man. I have a big question. Will AI replace me at some point?
That's a great question, and obviously a fear that a lot of people have. And we don't personally believe that AI will replace the business professionals, but we are certain that AI will be leveraged by every business professional in some way, shape, or form. The sheer power of it, the ability for it to analyze a significantly larger amount of data than we as humans are able to do, it gives individuals superpowers that really gives you a leg up relative to the competition. And so that's something that we look at and say, it's not the AI, and I'm sure you've heard this before, it's not the AI that's going to replace people, it's the people using AI that are going to be doing the replacing.
Mm. Yeah, not unlike, the advent of Microsoft Excel back in the 80s. If you didn't adopt Microsoft Excel, you're probably not working in finance anymore. You
Mhm.
hopefully made tons of money before that. Although you probably didn't in the 70s. So that is what it is. So give me an example, a concrete example of, a solution that you guys are delivering to your clients so that, us, the viewers, and myself can get a better handle on what it is exactly that AI is being leveraged to do today, and then we'll talk about what AI could be potentially leveraged to do in the next year, next few years.
Definitely. So I'll give you a quick example.
And feel free to
And
share your screen, by the way, if you want.
Oh, nothing to share on my end, but in terms of sort of a quick example, one of the things that we do on a daily basis is we work to consolidate the amount of information that the business professional like yourself has to digest in a given day. And so on average, each of our AI agents, as it pertains to an individual user, is analyzing roughly 5,000 articles in the morning before you've had your cup of coffee. And so we as humans are able to read 5,000 articles, yes, but not before the information inherent is no longer relevant. And so if the AI can analyze, condense, consolidate, and refine that information across 5,000 articles before you've had your morning coffee, and it's in your inbox, and you can read the summary and digest it, and understand how it's going to impact your portfolio, how it's going to impact your perspectives and your thoughts about market moves, you are already a leg up on the competition by 6:37 a.m. and you're ready to get going. And now you can take the time that you would have used to read however many articles you could in the morning, and you can do higher level sort of operations and thought processes with that information in mind. So that's one example, quick example of just information consolidation. Another example is, I think, more concrete in terms of business operations. And so we were working with a financial service group that essentially had this reporting process that on average would take them about 2 days. And through our system and our platform, we were able to reduce that process, that workflow, from 2 days to literally 2 seconds. And so by consolidating that, again, it frees up the business professional to do higher level, higher value sort of processes, as opposed to sort of the administrative, manual, tedious processes that are absolutely essential for a business, but are really low-hanging fruit for the AI systems in their current state. And it's only going to get better from here.
Yeah. So give me an example of like a financial reporting process. Like if I'm preparing as an investment advisor, preparing to meet with the client, I need to obviously understand the client's portfolio, their risks, their objectives, and all that kind of stuff. You're saying that rather than, I don't know, hand bombing all this stuff out of a database in Excel, that you have an AI solution that can just generate the report with a snap of a finger. Is that what you're saying?
Correct. So we are connected to existing wealth stacks, so that we are connected to CRMs, we're connected to data aggregators, custodians, so that we can dynamically ingest that information when it's relevant and when it's necessary and needed, so that we can centralize all that data and then empower you as the business professional to enrich it and transform it based on what is impactful for you. So for instance, through that meeting preparation process, I imagine you are probably referencing 3, 4 different applications. So if we can connect to all four, and with a snap of the finger or a question to the AI system in terms of, can you generate a meeting preparation slide or deck or just summary for me so that I can go into this meeting well prepared, it not only has all of the information that is relevant that you've defined and decided is important to include in that sort of pre-meeting prep from the CRM, that has the portfolio information specific to that individual. So now you're going into that meeting just equipped with more information than you really were able to digest and get through had you not started days before in terms of getting up to speed. And we're also taking into consideration third-party data, news articles from reliable resources, so that it's not just the client's information, but it's the client's information, their portfolio information, the market information, news and commentary, all centralized and aggregated to ultimately produce the item and the content and the material that you're looking for.
Wow. So then it sounds like a secondary offshoot from that would be client service too. Once you program, sort of what your client cares about, obviously through their portfolio, through your previous meeting notes, you could sort of generate an AI system that flags them in real time and say, hey, reach out to this person because of this, they care about that. Or, hey, reach directly out to this person. I don't know if we can do that legally or from a regulatory standpoint, but I can certainly see a world in which the amount of touches you have with your clients and the quality of touches that you have with your clients as an investment professional will increase in both and it's not only increasing, it's increasing in a way that does not leverage your sort of your human bandwidth. And because obviously you could work 1,000,000 hours in a week, but ultimately if you're not being productive in those 1,000,000 hours, you're probably not having the results that you want as a professional. This is cool. This is really cool. So let's turn this from the sort of kind of financial, representative, sort of business aspect of what AI is currently doing and the challenges you're currently helping those types of professionals overcome. Let's talk about the actual investment professionals, because you caught my eye with the BlackRock story and the leveraging their AI content. I used to work with those guys, the systematic equity team and systematic fixed income team over there for many years. And it's very impressive to see that AI was able to skirt billions of dollars of losses. And so when I think of that, I think of something like our global macro risk matrix, which is designed to help us identify changes in the market regime, changes in the factor leadership in the market, changes in the overall direction of the market prior to the market changing, right? Bullish or bearish. And so what I'm going to do here on slide 6, which is a sort of an overview of our risk management process that we maintain for our clients here at 42 Macro. I want to go through sort of each of the core elements of this process and see where AI can be of service either today or in some future state of development. So I'll start with the number one thing that we do for our clients that I think is most effective, that sort of produces the most optimal results, is helping them identify a position for the market regime. And we do that through this two-step process. Step number one is use our global macro risk matrix, which is a market regime nowcasting process that identifies the regime that the market's in based on the constellation of volatility adjusted momentum signals across 42 different markets. And based on, at any point in time, they could be saying, giving the most amount of, sort of conviction, any one of those 4 regimes: Goldilocks, reflation, inflation, and deflation, with the latter 2 being risk off regimes. And then our KISS portfolio construction process takes that information and, distills that down into a sort of a 3 ETF approach for retail investors. And our discretionary risk management overlay, Dr. Mo, takes that information and distills it down into what you should be doing across 70 different factors from a portfolio construction perspective for institutional investors. Which of those sort of things can AI be leveraged to either enhance or replace?
The short answer is all of them. If not right now, in the near future, or eventually. And the way to think about it is, even in terms of identifying the market regimes, one of the projects that I worked on, a while back was around this concept of geometric fractals and its relationship to statistical self-similarity. Yep. And so all of that is to say that the regimes can change in terms of the factors that determine what particular regime we're in can change over time. And so when you have the explanatory variables changing for a particular process over time, if you're able to identify those, then you can not only identify the market regime, but you can understand the changing inputs that you need to incorporate into the model in order to continue aligning with that process of identifying what particular market regime we're in. Now, in order to do that, you obviously have to have a powerful system that is analyzing all of these different variables and determining, is this the right set of things that we should be looking at to build this model, to build this system and this process. And so when you incorporate AI into that sort of discovery process of, are we looking at the right things? Are these the most explanatory variables to incorporate into our model, then you sort of have this system that is constantly iterating and innovating off of the core set of ideas that you had sort of seeded, and obviously is incredibly successful. But as we all know, alpha decays over time, and so you have to constantly be innovating and stress testing your prior assumptions and beliefs. And I think that's one thing where AI comes into play. And as you mentioned, we're friends, and so we have constant conversations. And I don't know if I've mentioned this in the past, but sometimes when we're having conversations, one of the things that I will do is I'll go into the application and I'll talk to Finn, who's the AI, and I will essentially ask a question to Finn to stress test an idea that I have. Because I could be talking to a version of Finn that is a macro expert. I could be talking to a version of Finn that is very systematic, or any iteration of those, to where my biases, my beliefs that have been formed over my career and impacted by my situation and sort of location where I'm at, I have my way of thinking, but I can stress test that with AI that has been formed around a different way of thinking. And so now we have this sort of instant ability to stress test our own ideas, our assumptions and beliefs that I think obviously it can be incorporated in this process as well.
Oh, I love that, man. That warms my heart, because that's something I've always believed in, which is your weights on any model should never be static. Now I'm giving away some institutional learning here, so everyone take out their pen. If you build a model and your weights are static, it's going to break in days, if not weeks. Your weight should always be changing based on ever-changing information, right? You should always have live back tests running to constantly optimize any model. And this is, I don't care if it's a fundamental research model, or if it's a macro model, or quantitative risk management signaling model. And one model that I think is sort of really prevalent in, I wouldn't necessarily say institutional finance, but certainly finance in general, is the concept of 60/40. And one of the things that we've identified with our research, with data going all the way back to the 1800s, is identified that 60/40 works best when inflation is trending around 1 to 2%. When you have 2% inflation or slightly there, you have a shortfall relative to that. You typically have bonds having this, I wouldn't say perfect inverse correlation to stocks, but certainly a very robust inverse correlation to stocks that's robust enough to construct portfolios with. Well, we have a fundamental research view, that inflation is somewhere between 3 to 3.5% on a headline, somewhere, kind of trending around 3% on core. That's a fundamental view. Is AI able to say, hey, 60/40 is dead, stop doing this? Or do you need fundamental research to say, I think we are now in this regime, therefore we should do X, Y, Z? How does AI fit into that discussion?
I would say that where AI is currently at, in the innovations that we've seen over the last couple of years around the generative AI, the ability to analyze unstructured data and the ability to understand text in natural language allows it to benefit from the fundamental research and incorporate that into its process. Now, when I started, a decade ago building AI and machine learning, you were constrained by the input variables that you could incorporate into a model. It was very numerical. It was very tedious and time consuming in order to build the pipelines to feed the model. Now, fast forward to today, and a lot of the constraints that we experienced a decade ago have dissipated with a lot of the innovations, not only on the software side, but on the hardware side as well. And so currently you have the ability to sort of take this fundamental research that has been put together by brilliant individuals and incorporate that into AI to do a lot of the things that I've already talked about. And I imagine a future, to go back to the last question, where if I have a question, or you're busy, or whatever the case is, give me 1 second, that I will be able to talk to Darius AI. And with that, it is sort of your knowledge base, your understanding, not only of the macro, the quantitative, the systematic, but also your fundamental understanding that is sort of approachable and can be sort of communicated with via that AI system.
You just thought of a great business opportunity. Can I upload all of our previous research into an AI training system and create Darius AI so that when clients ask questions, that the AI spits out, quality answers?
Exactly. Now, in terms of the quality answers, that's something that we work with business professionals and sort of, again, the domain experts to really refine in terms of what does that informative output look like. And it's not just information, but also content structure and ultimately whether or not the information is actionable. But through that process, you can do exactly that.
Oh, wow. That's amazing. So that takes me, I think it sort of answers my next question, which going back to our risk management process, one of the things, so a lot of folks hear me on TV or on podcasts. I'm always talking about, growth this, inflation that, liquidity this, policy that, and yada, yada, yada. But at the end of the day, most of that stuff doesn't impact what we do for our clients in terms of portfolio construction, asset allocation, signaling. But that stuff does matter because ultimately we have to help clients emotionally prepare for regime change. When you go from, I don't know, deflation to Goldilocks or reflation to inflation, you need to understand why it's happening. And you also need to understand how long is the new regime likely to persist. That'll give you an indication of how much you need to make changes in your portfolio to remain on the right side of market risk. And so I do believe that the fundamental signaling is very important. And so we sort of break down our fundamental sort of research process into two buckets. One, there's the quantitative portion of that, the econometric model driven portion of that. And then there's the qualitative portion of that, essentially me, creating a narrative around all the principal indicators that we know to be leading indicators of financial markets. And, so let's just start with the one on the left here, the quantitative signals. We use our grid model to forecast growth and inflation and ultimately forecast what we call the bottom-up macro regime in the economy, which generally speaking, the market regime is trying to price in usually on some short lead. Is that something that AI could potentially help with?
Definitely. And again, it comes back to not only are you able to sort of improve the existing systems and processes that you have, but it could also be the case that the AI, because it genuinely does operate and think differently from the way that we do, could offer a unique perspective that we may have never even considered before. And so I think opportunities like that are, some of the, I think the most impactful, especially when you're analyzing a large number of variables that could potentially have an impact. But we just haven't had the technology and the resources to really drill down and identify across such a broad set of potential impact.
Yeah, 100%. I mean, that's a great, sort of answer to that question because, we know from decades of studying institutional finance that, growth and inflation are very important indicators. But are we tracking the right growth? Are we tracking the right inflation? And that brings me to our other model, our macro weather model, which we use to sort of, kind of help clients use fundamental signaling to assess the probability of regime change to a, quantitative process. And, the back testing process for figuring out, which of these variables should be featured in the model. One was painful and arduous, took months to figure out, kind of hand bombing and back testing. Okay, I think this matters. Okay, I think this matters. Okay, this matters slightly more than that. It almost strikes me naturally that AI can not only do that better than a human being can, but also can maintain it in a way that says, okay, this is no longer a signal. This new thing over here might actually be more relevant in terms of generating, the probability of regime change. And so to me, I think I'm answering my own question, but it seems like AI is set up to do a lot of the computational econometric style work that we currently do as investment professionals better than us. And I think we have to acknowledge that and ultimately incorporate that into our processes. I asked you this question when we met in person down in Miami, which is why even have, this, like, why even have a macro weather model or a positioning model or grid model or even a global macro risk matrix that protects the market regime? Why don't I just plug the AI system, QFIN is your system, and this is obviously future state, but why not just plug QFIN directly into Bloomberg and have it create this deck for me, right? Like why, like Darius Dale assumes that a lot of this stuff is relevant based on my 15 years of institutional finance. However, my 15 years in institutional finance may either A, cease to be relevant, or B, may not be as relevant as something else that could be more optimized. So why not just plug this into Bloomberg and suck all the data out into the models that you're running and have it actually create a more optimized output for what we're trying to do, which is help clients stay on the right side of market risk. Is that day coming at some point?
Very much so. And I mean, I can tell you from our own perspective and some of the things that we're working on, we will very much be in a place, to your point, to where we are generating these reports, these decks, where you are essentially not providing much structure because you want to benefit from that different perspective, that different way of thinking and analyzing. And you will simply say, pull the most relevant risk metrics or inflation metrics for this regime, and the AI will be able to go out and retrieve those and build charts and slides and a beautiful deck. In terms of why you need to have the structure, and it sort of gets into the approach that we take at QuaIL Technologies. And that approach is that with a lot of the foundation models, the perspective is that you will have one model that is, all encompassing, and it has, the largest number of hyperparameters and all these different things. We take a bit of a different perspective in that we see the human brain as the most powerful computational engine that we know of. And while we have one brain, we have many mental models. And so I have a mental model for cooking. I have a mental model for math. I have a mental model for driving and geometry. And my mental model for cooking isn't going to do me much good when I'm driving, when I'm on the road, but my mental model for geometry may inform how I navigate different situations on the road. And so the idea is that having this structure of mental models can help the AI sort of align with the objectives that you ultimately want to accomplish. And so having the AI operate within the structure that you want it to operate within ultimately leads to better outcomes. And it's a trade-off. And you can imagine a situation where you have a financial analyst, and there are two situations, two scenarios where you can tell the analyst to go out and explore and come back with something. And that's where you want to benefit from the analyst's unique perspective, unique way of thinking. The other situation is you tell your analyst, I need you to go build this report. I need you to do this, this, and that, follow this structure, reference these data points because you need it a particular way. And you understand through your process what can ultimately benefit the client. And so with that in mind, there are really two different ways to look at it from that perspective, and both have value.
That's incredible, man. So like, I love the mental model thought because that's sort of what we're doing when we produce fundamental research, right? Like we as investors sort of, we all we get trained in these silos, right? Like your value investor, your growth, these higher cup growth investor, your pod shop trader, we all have these mental models of how the world works. And we sort of express that through our positioning and our portfolios. Myself as, sometimes I wear my risk manager hat, which is most of the time, but, so I also have to wear my economist hat and piece together and create these sort of themes and narratives for our clients to follow along with so that they have a, sort of more informed view of what they're seeing out there in the world and ultimately can have a lot more confidence when they're making investment decisions. Like I said, this, our fundamental research doesn't impact the signals that we send, but it does impact how our clients feel about the signals that we send. Right. And that is a very important part of our process. And so, I go back to this mental model concept because to me, it's exactly what I think I'm doing in my own head, but, it's obviously less structured than AI, a machine would be doing, which is I have a mental model for inflation. I have a mental model for the economy. I have a mental model for how policy works and how the reaction function should behave. I have a mental model for liquidity. And in my opinion, those are the four most important things you need to solve as a macro investor to get markets right, to get the trend and direction and dispersion within markets correctly. You need to have a great handle on growth, inflation, policy, and liquidity. And combining those mental models into a coherent, investable narrative can be very challenging at times, right? Like right now, like our sticky inflation theme is just, ragingly bearish, but there's other things that are sort of overcoming that. And how to weight those things is, in my opinion, the most challenging part of our job. You can have a very informed view on each of those four different cycles, but how do you weight them when you're trying to make investment recommendations or asset allocation decisions? Our choice is to not weight them at all, let the market determine what matters most and in what sequence. But ultimately, a lot of other investors may feel a lot less confident as we do, as trusting the market, trusting that the market is smarter than they are. And so, does AI have a solution for how to weight those various mental models when you're sort of dealing with unstructured data? And what is that solution?
Definitely. I think there's a couple different ways to sort of explore that concept. One is whether or not you believe there's sort of one truth, one way of thinking about the markets? And if the answer is yes, then you can sort of work to build a model that sort of aligns within that the confines of that sort of approach. The other perspective is to say no, there is no single truth. And I think that, again, going back to the mental models, you have various mental models that investors have that can ultimately realize positive benefits and be successful strategies. And with that in mind, you can sort of imagine a situation to where, think for instance, you have an AI that specializes on inflation. You have AI that specializes on the US economy and XYZ. And you, in the past, if you wanted to have a conversation with all of these individuals, let's say you want to talk to somebody who's an expert in inflation, an expert economist, an expert macro individual, you'd have to historically get around a table, gather everybody, do scheduling, calendars, and all these different things. Now you can build AI with that particular focus, that particular mentality and way of thinking about the world. You can build that, and then you can sit around and have that conversation. So one way is saying, okay, yes, we can build a model that can optimize, because that's what AI is at the end of the day. It's a big optimization problem. So I can optimize these number of constituents, these variables that I want to put and incorporate into my model. Or you can take the perspective of maybe it's not an optimization, but it's a conversation, so that we can ultimately arrive at what that weighting is. And I think with AI and the way that it's being developed, you're quickly coming to a situation to where you have the ability to do that in a rapid time frame.
Wow. Yeah. No, it sounds very powerful. I mean, this is a lot of what we do here is sort of what I find to be the most effective, across institutional finance in terms of managing risk, and sort of help, and formulating fundamental defensible narratives around fundamental research views. And if AI can accelerate that process or make that process more optimized, that naturally frees up the investor to spend more time on optimizing the trades and the trade structures and the portfolio construction in a way that maximizes return and reduces risk, right? If you spend less time formulating a thesis and less time trying to time the market and more time trying to structure the best possible trade, to take advantage of that information, you're probably going to do better and have better results than folks that aren't. I think of the famous Soros and Stan Druckenmiller when they broke the pound. I was Stan Druckenmiller was on In Good Company, the podcast this week, and they were sort of rehashing that experience. And one of the things he mentioned was that when he pitched the thesis to George Soros sort of looked at him crazy and was like, okay, you have 100% of the fund in this trade. Why not 200% of the fund in this trade? And obviously it's a $7.5 billion fund at the time, So like, it shocks me is that like, and obviously that's one of the best trades, arguably the best trade in currency market history. You know what I mean? So like, if you can have more time, if you can spend more time optimizing your trade structure, your portfolio construction, and less time actually formulating the thesis and updating the thesis and maintaining the thesis, I mean, the sky's the limit in terms of the return maximization that you can have as an investor. And I'm sure, some of the world's best buy-side institutions, you and I are both well familiar with them, are already doing things like that.
Yep, definitely.
100%. So obviously this has been a very lauding praise of AI and the current wave of AI development and future state of AI development. What can't AI do and what won't it be able to do in the future?
Definitely, it's a great question. And as I sit here and I sort of talk about all the things that we're working on and have this big picture perspective of where AI is ultimately headed, there's still a lot of challenges that exist. And as I mentioned, a lot of the constraints that we were dealing with a decade ago have dissipated, but there are new constraints that have come up, and constraints from the past that are still prevalent. Compute obviously is one, the cost of compute, and so there's a lot of research and a lot of effort being put into how can we develop more energy efficient AI and sort of the training process. But at the end of the day, it really comes down to the data, and so figuring out ways to gather data to decrease the cost of data so that it becomes more accessible and everybody can benefit from the value that can be derived from it, I think is another thing that is of high importance as we move forward and sort of tackle these challenging problems within the space. And again, for all of the things that we talked about, there is an equal number of things that still need to be overcome. In terms of what AI cannot do and will not be able to do, the best quote that I have heard was actually from will.i.am at the Economic Forum in Davos in 2022. And he said that for as impressive as AI is, it will never be able to be more human than we are. And so when you think about that from an investment perspective, from an investment management perspective, I think what that means, and you've said this many times over the course of the conversation, is the power of AI to sort of crunch numbers, to perform optimizations, to analyze a lot of data, and come up with actionable insights is incredibly powerful. What I don't think it will be able to do better than we as humans will be able to do is the people component. Managing, to your point earlier, the emotions around regime changes and portfolio changes and investment updates, managing the relationships, helping people through difficult times, whether it is market related, whether it's a personal situation, whether it's just overall wealth management. I think there's a lot of those sort of personal touch components where the human, the person will continue to be the most important part of the process.
Oh, I love that, man. That's so, so true. I find that in our own business. I've learned this throughout, when I first started this business, 3.5 years ago, I'm just like, oh, I'm a smart guy. I'm really good at my job. Let me create solutions for investors. And over time, and primarily through interacting with our, larger growing community of clients, I realized that they want to be on this investing journey with me. They want to experience the same world and interpret the data in the similar fashion that I am, and share a same collective narrative. Because at the end of the day, investing is a community thing. It's a social activity. We are pooling our capital together to produce outcomes in the future, based on our savings and our corporate profits and yada, yada, yada. And so I think I share that belief. I don't know if I would have shared that will.i.am's belief 3.5 years ago, but I certainly am on board with that and understanding that, look, man, this is a community oriented game that we call investing. And there are certain people you want in your community, and there's certain people that you don't want in your community because they have fundamentally different worldviews. That may be valuable. I think it's important always to have the opposing view. But at the end of the day, AI is just only going to make this sort of social game we call investing better, more efficient, more optimized, and ultimately we should be producing better results on our own and our clients' portfolios as a function of that. So before we wrap up, just give me your 30-second pitch on QFin and where folks can go to find you.
Definitely. So if you want to learn more, you can go to get.quantumai.dev. And what QFin does is, like I said in the beginning, it allows and empowers business professionals like yourself, wealth managers, investment professionals, financial advisors, and just financial service professionals generally to centralize, enrich, and transform their data for downstream processes, everything from market research to report generation, client stakeholder management, and communication, and then ultimately to these AI agents that sort of have come up over the course of this conversation that will continue to be incredibly impactful. And the process that we take, again, is to really just empower the business professional. I think a lot of the products that are being put out today are sort of geared towards developers and highly technical individuals. But I think that there's a gap in terms of building tools for the people who understand how to apply the technology in the most impactful business manner. And so that's why we're incredibly excited to be working with just incredibly talented and brilliant individuals, and really excited to continue working and sort of following this journey and seeing where AI takes us. And we are very, very excited for what the future holds.
Yeah, me too, man. It's awesome. It's there's a lot of stuff going on in the world, not the least of which is the fork turning that our clients are imminently familiar with. But it is wonderful to know that we have smart people like you, working on creating some really big stuff and powerful solutions that, that are really going to benefit society. And we're just excited to, I'm excited to work with you and hopefully be part of that cohort of smart, talented folks that you're working with to develop some of these solutions, man. So I want to thank you for your time. Again, was it quantum.dev.ai?
Quantumai.dev.
Quantumai.dev. So definitely go check out Andrew Fischer. If you're any one of our many investment advisor clients, I'm looking directly at you. If you don't, your business will get overtaken by your competitors if you don't go check this guy out at some point in the future. So just be aware of that. So I appreciate everyone for tuning in. We'll catch you back here. Actually, next week, we got a double dipper for the month of October. We got our friend Bob Elliott over at Unlimited Funds to come check in with us. Bob's obviously one of the best macro minds in the world, so we're super pumped for that. So stay tuned. Everyone have a wonderful weekend. Cheers.